Michael Burry, the legendary investor known for his bold and contrarian bets, and the person who managed to predict the 2008 financial crisis, has once again made waves with his Q3 2024 portfolio. Through his hedge fund, Cyan Assets Management, Burry disclosed 8 positions with $83 million in total value. In this video, we'll break down his key positions, explore the rationale behind his decisions, and uncover lessons for investors. This is my first video in the Super Investor Portfolio series. So if you haven't yet, consider hitting the subscribe button to stay updated with future portfolio breakdowns. And now, let's dive into Michael Burry's top holdings and what they reveal about his investment mindset. So, to start off, with over 25%, the Chinese e-commerce and cloud computing giant Alibaba is Burry's largest holding. This allocation highlights his conviction in the company's ability to navigate regulatory challenges and leverage its vast ecosystem for growth. The second largest position in his portfolio, with around 24%, is JD.com, another major Chinese player in the e-commerce space, known for its cutting-edge logistics and expansion into fintech and healthcare spaces. Shift4 Payments is the third largest holding in Burry's portfolio and focuses on the booming fintech sector, specifically cashless payment solutions, aligning with global trends towards digital transactions. It consists of 16% of Burry's portfolio. Baidu is Burry's fourth largest holding, with almost 16% allocation. Baidu's focus on AI and autonomous driving technologies makes it a key player in China's tech and innovation sectors. Burry's fifth largest position is Molina Healthcare, a significant defense position. Molina balances the portfolio with exposure to government-backed healthcare programs in the US. Additionally, Burry has small positions in Olaplex Holdings Incorporated, Real Incorporated, and American Coastal Insurance Corp. Looking at his portfolio, we can clearly see that over 65% of Burry's portfolio is concentrated in Chinese companies, signaling a bold bet on the region's economic recovery and long-term potential. This focus contrasts with Burry's historical US-centered portfolios, showing his adaptability to global opportunities. Also, we can clearly see that the portfolio leans heavily into the tech and e-commerce, which make up over 80% of the allocation, reflecting Burry's growth-oriented strategy. However, the inclusion of Molina Healthcare adds a layer of stability, mitigating the risks associated with high-growth sectors. Now, let's dive deeper into each of his top holdings. Alibaba dominates Burry's portfolio, with a 29% increase in shares this quarter. But why such conviction? Baba isn't just an e-commerce giant, it's a leader in cloud computing and digital media, which are critical growth engines. The company's vast ecosystem offers resilience and scalability. Additionally, Alibaba has a really solid free cash flow, trading at between 6 and 12 price-to-free cash flow ratio for the past few years, which is a really solid number that gives the company the opportunity to continue its investments and scale their growth in the future. Adding to that, Alibaba's latest earnings report showed year-over-year revenue growth increase of 9%, with strong performance in cloud services growing their customer base. Also, its international e-commerce platforms, Lazada and AliExpress, continue expanding, offsetting domestic challenges. However, there are negatives to the company as well. For example, regulatory pressures from the CCP. But the Chinese Communist Party seems to have changed their mind on the crackdown and instead decided to stimulate the economy. Additionally, the Chinese economy has been seeing a slowdown, which naturally could affect further growth numbers for Alibaba. There is also the factor of foreign politics. For example, recently re-elected Donald Trump has already announced plans to impose new tariffs on China. Regardless of all of these things, this investment signals Burry's belief in Alibaba's ability to navigate uncertainty and emerge stronger, especially as China's economy stabilizes. Burry doubled down on China, acquiring JD.com this quarter, making it his second largest holding. JD's strengths lie in its unparalleled logistics network, which gives it an edge in the Chinese competitive e-commerce space. So what is driving Burry's confidence? JD's focus on automation and AI in its warehouses has reduced costs and improved efficiency. The company is also diversifying into healthcare and fintech, opening new revenue streams. When it comes to cons, in my opinion, JD has the same issues as Alibaba. Regulatory pressures from the CCP, slowing China's economy, and foreign politics. Nevertheless, this aggressive addition suggests that Burry sees JD.com as a long-term winner in China's evolving retail landscape, the same as Alibaba. With 50% increase in shares, Shift4 Payments has become a cornerstone in Burry's portfolio. The fintech company caters to sectors like hospitality, retail, and sports, offering end-to-end payment solutions. So what's so exciting about Shift4? The global shift towards cashless payments is creating massive growth opportunities. Also, Shift4 has recently expanded into the European markets, positioning itself for international growth. However, the company is sensitive to consumer spending. As a payment processing company, Shift4 relies heavily on transaction volumes. Economic downturns or weak consumer spending, especially in the hospitality and retail sectors, could pressure its merchant clients and slow adoption of its services. Competition is another notable challenge for Shift4 Payments. The payment processing industry is highly competitive, with established players like Square, PayPal, and Adyen, as well as traditional institutions and emerging fintech startups. However, despite all of that, this investment shows Burry's continued confidence in the company and aligns with his tendency to back disruptive companies in emerging industries. Baidu, often referred as the Google of China, is another major addition. Its focus on AI and autonomous driving technologies makes it a standout in China's tech landscape. And here's a couple reasons why Baidu could be a game changer. Strong AI and cloud potential. Baidu is heavily investing in artificial intelligence technologies, including autonomous driving, healthcare, education, and AI cloud services, which are critical sectors and have a lot of growth potential in the future. Additionally, Baidu remains the leader in China's internet search market, providing a stable revenue base and leveraging its data advancements in AI and other technologies. However, there are flaws as well. Baidu's revenue growth has stagnated since 2021, with only marginal increases recently. This reflects challenges in scaling its core and new business segments. Also, as a Chinese company, they face similar risks as Alibaba and JD. In a big contrast to his tech-heavy bets, Burry's investment in Molina Healthcare highlights his defensive side. Molina specializes in Medicaid and Medicare plans, making it a steady performer in volatile markets. So why Molina? As government-backed programs Medicaid and Medicare provide predictable revenue, Molina manages to turn revenue into steady profitability. Additionally, as a provider of essential health services, Molina benefits from the defensive nature of the healthcare sector, offering stability during economic downturns. With an aging US population, demand for managed healthcare services is poised to grow. So what are the flaws? Recent membership guidance reductions suggest challenges in maintaining robust growth, especially in the Medicaid enrollment, leaving it vulnerable to changes in state budgets and federal funding allocations. To sum up, I would say that this position balances the portfolio, offering stability amid the risks of the tech investments. Burry has also investments in 3 smaller positions. Olaplex, a specialized player in the beauty industry renowned for its patented hair care solutions, Olaplex caters to a niche audience with a focus on high-margin, science-driven products, achieving consistent but modest revenue growth amid market challenges. He also has a position in The RealReal, a pioneer in the luxury resale market. RealReal operates a unique consignment model for high-end goods, but its recent valuation struggles highlight the growing competitive pressures and consumer caution in discretionary spending. As you can see, Burry has cut his RealReal position in half. Burry also reduced his position in American Coastal Insurance, focused on providing property and casualty insurance in coastal regions. ACIC faces significant risks from climate change-driven weather events, leading to sharp market skepticism about its growth and profitability. So after reviewing Michael Burry's Q3 portfolio, we can clearly see a reflection of the strategies that have defined his career and his ability of making bold, high-conviction moves. He is known of concentrating his portfolio into a select few high-conviction positions, often taking large, calculated risks on opportunities that he thinks are significantly undervalued. This is clearly seen in his investments in Alibaba, JD, and Baidu, 3 major tech stocks in the Chinese environment. These moves kind of remind me of his approach during the 2008 financial crisis, when he made a daring bet against the housing market by betting on subprime mortgage-backed securities that most investors thought were safe. Like that infamous trade, Burry's bets on the Chinese giants demonstrates his preferences for taking sizable positions in areas where he sees massive upside potential even when others are skeptical. He has the ability to take contrarian bets that go against the market sentiment. And the bet on China is a clear example in this, as they defy widespread caution and skepticism around China's regulatory environment and market volatility. This also mirrors his 2019 GameStop position, where he took a substantial risk on a company many thought was on its way out. Burry saw the potential where others saw a dying retail chain. While most investors were busy counting GameStop out, he was loading up, showing once again that he has the ability of spotting value before it becomes trendy, like GameStop did. So what can investors learn from all of this? Michael Burry's portfolio offers valuable lessons for retail investors, but it's important to approach them with a sense of realism. Burry is an exceptional investor with deep understanding of the markets that comes from decades of experience. His bold moves on heavily concentrating on high-conviction stocks aren't for everyone. For most retail investors, putting their money into few large bets isn't just risky, it's often reckless. It takes years of practice, analysis, and a unique mindset to confidently make such bold bets. That's why diversification remains a key strategy for many of us, providing stability and reducing the impact of mistakes. That said, Burry's contrarian approach also reminds us not to fear taking calculated risks and going against the market sentiment. The market isn't always right, and significant opportunities often arise when the crowd overreacts. A great example is the dramatic turnaround in Meta, formerly known as Facebook. In 2022, its stock plummeted from $380 to just $90, with many declaring the company's best days behind it. Yet it rebounded, now trading at almost $600, rewarding those who saw through the panic. Burry's approach teaches us to combine research with courage and balancing risk with stability. While it's essential to be adaptive and responsive to changing market conditions, as Burry often is, it's equally important to understand your own limits. For most of us, Blending bold decisions and diversification can strike the right balance between ambition and caution. So what do you think about Burry's portfolio and his bold bet on China? Do you agree with his strategy? Let me know in the comments. And as always guys, thank you for staying till the end of the video, and don't forget to like and subscribe for more insight in the portfolios of super investors. Thank you, and I hope to see you in the next one. Bye.